our African strategy about 2 years ago, and there hasn't been a change over that last 2-year period. And to think about it, as the smallest bank in South Africa, clearly our major focus area has to be on improving our competitive positioning in our domestic market. But thinking about the rest of Africa, we have what we think about as 4 pillars to our rest of African strategy. The first pillar is those businesses that we already own and manage in the rest of Africa: Swaziland, Lesotho, Namibia, Zimbabwe and Malawi. So we already do have a footprint pretty close to home here in the southern tip of Africa. The second piece of our strategy has been building and deepening the alliance we have with EcoBank. And between us, we now have presence in some 35 African countries to provide our joint customer base with the leading Pan-African banking experience. The third piece of our strategy is what we would call boutique investment banking. So we do a number of projects in Africa in the trade finance, infrastructure, mining, telecoms and power environment. And perhaps you'd have just seen we were one of the lead arrangers on the Ghana Cocoa Board deal that got announced recently. And then the fourth piece of our strategy is to continually look for investments to build out our franchise.
What type of returns have you seen from your investment in partnerships with the likes of EcoBank in Africa?
So certainly from our perspective, the key returns in that partnership have been to our customers, because we've been able to provide our customers with a service as they migrate their businesses into the rest of Africa. The returns back to Nedbank have really been from investment banking projects that EcoBank has identified in the rest of Africa that we have executed. So at this stage of the relationship, we're certainly measuring it much more in relationship terms and client terms than financial returns to our shareholders.
Is Africa going to become more of a focus for you, or are you going to continue to focus on the unbanked population here in the domestic market?
So I think if you look at Nedbank in particular, our vision is to build Africa's most admired bank. I think what's clear is that to be Africa's most admired bank, given the relative sizes of the current economies, we have to firstly improve our relative positioning here in South Africa. But over the longer term, or medium to longer term, we would directionally like to get somewhere between 5 and 10% of our capital and earnings coming out of the rest of Africa.
Are there acquisitive opportunities in Africa at this point in time? We see, for example, in Nigeria, many of those banks really trading at a serious discount to net asset value.
Yeah, so certainly there are opportunities. I think the key challenge is that those opportunities from our perspective need to be in line with our strategy. They need to be culturally aligned, and they also need to make financial sense over the longer term.
Are you evaluating any of those opportunities right now?
So we continually evaluate opportunities in various geographies in Africa, and that's pretty much a normal part of our business at this stage.
Let's talk about Zimbabwe, because you have a 74% stake in MBCA. What are your plans in terms of meeting the Zimbabwean government's empowerment targets there?
So certainly we think that our position in Zimbabwe is slightly different. We actually owned less than 50% of that business probably about 2 years ago. When the business required capital, none of our fellow shareholders were able to provide that capital to the business. So we effectively underwrote a rights offer, which moved our shareholding up to 74%. So I think it is a slightly different position to what you see many of our competitors in, given the history of that. But certainly we're looking at a transaction at the moment involving our staff and our customers to reduce our shareholding slightly from that level.
Do you have any target?
No, at this stage we don't have a specific target around where we think we will end up from a shareholding perspective. Perhaps suffice to say that we do believe we need to control that entity to be part of the Nedbank franchise.
How strategic is your positioning in Zimbabwe to the overall Nedbank group positioning?
So at the moment it's a very small part of our business, but certainly to the extent that the Zimbabwe economy begins to grow, clearly Zimbabwe can be a much larger trading partner to South Africa, and our business in there should be able to grow very strongly.
So retaining a majority stake is really important for you?
Clearly it's important for us, and we would like to believe that it's also very important for the Zimbabwe economy to benefit from the power, strength, experience and product knowledge of the likes of South African banks and overseas banks to develop that economy.
Let's shift our focus back to South Africa. We've got Jill Marcus coming out with quite bearish forecasts for GDP growth going forward. The Finance Ministry alike also revising down their GDP forecast. What is the health of the South African consumer according to your evaluation right now? Are you concerned where the economy is going?
Yeah, so I think in many ways it depends what lens you look at the South African economy from. So if you went back 6 months ago, we probably thought the South African economy this year would grow at around 3.6%. Right now, we probably think at around 3.1%. So clearly, if you want to have a negative lens, you can say that growth has dropped from 3.6 to 3.1. If people have attended any of the meetings of the IMF in the USA or any of the meetings recently in Europe, they're battling to grow anything above naught, maybe between naught and 1. So relative to that, clearly our growth position is still strong, although maybe not as strong as we would like it to be. I think the consumer in South Africa is still under pressure and highly indebted. There has been some reduction in that overall level of indebtedness, down from about 78 to I think about 75%. So what we are seeing is continued improvements in the levels of arrears and non-performing loans in our books, but that doesn't mean that the consumer is not still under pressure.
South Africa, when it comes to our banking system, rated second when you look at financial soundness, according to the World Economic Forum report, and that is quite significant, given the state of Europe's banking system at this point in time. But how exposed is Nedbank to Greek or PIGS debt?
So we have no exposure at all to PIGS debt. So, and I don't believe any of our peers have any material exposure at all.
So that shouldn't be a concern?
No. The only concern from a South African perspective is the indirect effect of if there is a sovereign default in Europe, or if Europe grows at extremely low levels for a long period of time. They remain our current largest trading partner, so there's a knock-on effect into growth in South Africa. But I don't believe there's any knock-on effect into the strength of our banking system.